Hi, I'm Jamie Elfman, Assistant Editor, sitting in for Kim Schmidt, who is on maternity leave. Welcome to On the Record. Here's a look at what's currently impacting the ag equipment industry. The Association of Equipment Manufacturers reported on October 10th that North American large ag equipment retail sales declines slowed in September. Mick Dobre, analyst with R.W. Baird, said in a note to investors that mid-range tractors continue to show relative strength, increasing 28% year-over-year compared to up 8% last month. U.S. and Canada large tractor and combine retail sales posted a year-over-year drop of 6%, but improved from the 17% decrease in August. U.S. sales dropped 10% year-over-year, while Canadian sales rose 23%. Combine retail sales also fell, posting an 11% year-over-year decrease in September, following a 24% decrease the previous month. Row crop tractor sales posted a 2% year-over-year decline, up from the 9% decrease observed in August. Four-wheel drive tractor sales declined 13% year-over-year in September, compared to a 36% decrease last month. AEM's Ag Executive Advisor newsletter reports that the declines in the farm machinery industry are being strongly impacted by the downturn in net farm income. The revised 2014 net farm income is set to be $113.2 billion, down 13% from 2013. This makes this year's net farm income the lowest since 2010, but still $25 billion above the 10-year average. Nearly one-third of the 300 dealers who responded to Ag Equipment Intelligence's 2015 Dealer Business Outlook and Trends survey either expanded or built a new facility in 2014. 11% of dealers say they built a completely new facility this year, and 19% say they expanded their existing facility. But next year, 10% fewer dealers will be investing in facility expansion, with 8.1% planning to build a new facility and 11% looking to expand. The slowdown in dealership expansion for the year ahead is likely due to dealers' concerns about slowing sales. Overall, 50% of dealers expect revenue from new equipment to decrease by 2% or more. This is only the second time in the 10-year history of the survey where more dealers have expected revenue decreases than increases. Irrigation equipment manufacturers are posting better earnings than anticipated based on strong demand for replacement parts and equipment. Lindsay posted fourth quarter sales results of $148 million, which beat analysts' estimates by $25 million. C. Sean Williams, analyst for BB&T Capital Markets, said in a report to investors that Lindsay's stronger-than-expected sales and revenue numbers are primarily due to growth in U.S. irrigation, which increased 31.2% year-over-year in the period, after 3 consecutive quarters of negative year-over-year growth. Williams says, U.S. irrigation sales were notably strong in the period, primarily due to storm-related replacement demand of $15 to $20 million. Severe damage from spring and summer storms helped to accelerate replacement sales within irrigation and partially offset the negative impact of weaker commodity prices. Lindsay's strong showing prompted BB&T to update their estimates for Valmont's earnings as well to reflect the likelihood of accelerated irrigation sales for the company. Williams said they believe Valmont will benefit from similar trends in replacement demand, which resulted in Lindsay's higher-than-expected sales revenues. BB&T now estimates Valmont will see a 4% increase in revenues in the third quarter. The gap between this year's harvest progress and the 5-year average continued to widen, according to USDA's latest weekly crop progress report from October 14th. While 74% of corn was rated to be in good or excellent condition, and corn maturity was reported at 87%, only 2% behind the 5-year average, only 24% of U.S. crop had been harvested as of October 12th. This is 19% behind the 5-year average. The Farmland Forecast Report from Colvin & Company attributes the slow harvest to wet weather, resulting in high moisture content in corn. USDA reported a similar story for soybeans. 73% of the crop is reported in good or excellent condition, and 91% of soybeans were reported to be dropping leaves. Soybean harvest was reported at 40%, a 20% increase from last week, but 13% behind the 5-year average. Now here's technology editor Jack Zemlinka with his latest report from the Technology Corner.
Thanks, Jamie. One of the ongoing debates in agriculture is how farmers will continue to increase yield on less land using fewer inputs. In the September issue of Farm Equipment magazine, editors examine the trend of manufacturers producing faster machinery and whether this is the pathway to improving farm productivity. According to industry experts, speed is only one piece of the puzzle. John Fulton, Associate Professor and Extension Specialist of Biosystems Engineering at Auburn University, suggests that precision technology will be instrumental in increasing the capacity of farm equipment in the future. Fulton focuses on machinery automation and precision farming and says that as equipment increases in size, so too will the emphasis on automated functionality to improve field performance. However, Fulton also notes that machinery is maxing out in terms of size, and during the next decade, there could be a movement towards smaller tractors and implements to more quickly perform field operations.
I really think that when you see the automation occur on the large machines, that's moving us in the direction of really having autonomous type machinery, but ultimately we'll probably see that at a smaller scale initially from a purely autonomous, probably at a robot level of doing some of the field assessment initially, and we'll start to see machines thereafter, smaller tractors possibly being robots doing some of the field functions, maybe cultivating or doing some of the planting functionality that we talk about today.
Robots patrolling the farm fields might seem far-fetched, but Fulton says it's a distinct possibility that in the next 10 years, we'll see ground scouting and weed detection being done by robotic machinery weaving in between corn rows, collecting data that can be used to improve efficiency. Back to you, Jamie.
Thanks, Jack. And now from the Ag Equipment Archives. In 1902, Brillion Iron Works, Brillion, Wisconsin, which is today owned by Landau Corporation, produces the first soil pulverizer to produce smooth seedbeds for planting. Its smooth roller wheels broke clods to provide a finer and firmer seedbed as compared to finishing a seedbed with a drag or harrow. Features of later models of the pulverizer are still used on today's models. As always, we welcome your feedback. You can send comments to jelfsman@lespub.com. Thanks for watching. I'll see you next time.